resilience is showing, obviously, in Nigeria's economy. Now, let's examine these developments as we gradually close the year 2025. Yes, in another 7 weeks, I guess so, we'll be saying bye-bye to 2025. My guest is Dr. Biodun Adedikpe. He is a managing consultant at B. Adedikpe Associate Limited, also a professor of practice teaching economic policy analysis at James Hope University. Doc, it's good to have you start the week with us on the show. Good afternoon. Thank you for your time.
Yeah, very good afternoon to you, Tolu. I'm happy to be here.
Yes,
Thank you. Thanks.
Thank you so much. Well, I think it's good for me to allow you give an overview of Nigeria's economy. You know, we've been on this for some time, back to back, from one issue to another, from one topic to another, and we are gradually wrapping up 2025. And of course, there have been some milestones, there's been development, there's been challenges, and all of that, even as we move towards the end of the year. What is your overview of the state of Nigeria's economy at the moment, considering the pros and the cons of these reforms embarked on by President Bola Tinubu's administration?
All right, thank you so very much. I will start it this way, that where the Nigerian economy is today is by far a lot better than where it was at the end of 2024. And of course, as rightly said, there are many metrics we can point to as evidence to prove that. Conversations like this are better driven by evidence. And so you mentioned one of them just now, which you also gave a little bit of dive down into. And that is the basic fact that the economy has been growing. There's no doubt about that. And of course, when you see the trend line as well, it shows clearly that the Nigerian economy has been growing, that the speed of growth also got faster in the second quarter of 2025, as mentioned earlier, coming from 3.13% first quarter to 4.23% second quarter. And that is very good pointer for Nigeria in terms of direction. Now, if you look also at the various sectors of the economy, and I want to bring something here to the attention of the viewers, and that is the fact that when we, some 18 years ago, envisioned a Nigerian economy that would be among the top 20 year 2020. We're basing that on what the economy looked at the time and the manner of reforms we needed to make in order to bring it to that level. Now, one of the things that happened recently was the IMF issued a report and said, look, we discovered that each time we evaluate the GDP of Nigeria, there are certain economic activities that were ignored. When we brought them into the conversation, we discovered that number one, the size of the economy is 40.8% bigger than what we had previously. But that was just a little part of it. The one I found most interesting was the fact that when they now looked at that, and in terms of what was the economy like, if we bring this to the conversation from the 1990s, they now brought out the fact that in year 1998, in year 2013, 2014 and 2015, Nigeria's economy was among the top 20 in the world in terms of size. So now what that did to me was that, so that means the issue is no longer about whether we are part of top 20 or not. And in fact, we're aspiring to achieve that by 2020. We had actually attained it before then, which means the focus now should be on growing the economy inclusively. And that is the essence of what we are looking at today. If you look at major other metrics, take a look at inflation rate. We're in a better position today than where we were end of 2024. There's no doubt about that. I want to also point out something that had changed in the Nigerian economy with respect to inflation. Most people mix it up. Even some professional economists, disappointingly, also talk about inflation as if inflation speaks directly to the price of tomato, garri, beans, rice in the market. Now, an inflation rate means the rate at which prices are increasing, which means prices ordinarily increase everywhere in the world and on an ongoing basis. In fact, we often say that the motivation for a producer to return to the factory or his farm, as the case may be, is the promise that he will sell more quantities at a higher price tomorrow. That's why it goes back to the factory. So it is expected. That's why in macroeconomic policy, we talk about inflation being moderate as a target, all right? So now, when we say inflation rate has dropped, what it means simply is that the rate at which prices are increasing has subsided. There is a change in 2025. If you look at July, August 2024, inflation rate in Nigeria dropped a little. And we're able to ascribe that to harvest season in 2024. Then September 2024, the rate went up again and started moving. Why? Because that was when we adopted, let me say, a correction in the pricing of electricity that affected energy costs. But when you look at this year, two important things I want to bring to attention. Number one, the rate of inflation has been declining since April this year. And of course, unlike in 2024, it has also continued to decrease beyond August. We are in November now, we have data for September already out, we are waiting for October being processed. So what has changed then is that the drop in the rate of inflation has, let me say, persisted beyond August, which traditionally was known as the harvest period. So what informed that? Again, harvest period extended, all right? So we have seen that on the one hand. Now, on the other hand, if you look also at the oil market, yes, Nigeria has suffered somewhat, let me see. One, because of oil output locally below the budget assumption. Equally, the price of crude oil in the international oil market below our budget assumption. So oil revenue has dampened somewhat. But this year, non-oil earnings from merchandise trade and other services that we sell to the rest of the world have increased significantly. Okay, with the earnings increased, especially in non-oil exports. We also saw something that happened in July this year for the first time ever in the history of the Nigerian economy. And that is, historically, you can mark that with the data from 1960 to date. Okay, anytime there was a dampening in the price of crude oil in the international market, usually the impact is immediate on Nigeria's foreign earnings. And that also shows in government revenue, and of course, it causes some distortions, all right? Therefore, the first time this year, we saw the exchange value of the Naira remain where it was within a narrow band when the price of crude oil began to drop. And that has been maintained till today. So if you look at the data from November 2024 up until now, that's a whole year, the Naira exchange value has remained stable within a very narrow band. So all of those are changes. So what we now say then is that we have seen a measure of stability at the macro level. So what now remains is to take it down to the micro level, which is why we talk about growing the economy now inclusively and ensuring there is more of trickle down of the gains at the macro level. Let me stop there for now.
I like that point where you stopped, Dr. Adedipe, because I was actually heading there. But before I get there, two things you talked about: stability in the foreign exchange markets. Many will say thanks to our steady reserves too, doing about $42 billion at the moment, which many see as a step in the right direction. Policies being instituted by the Central Bank of Nigeria and all of that. Now, two questions now in one for you. How stable is this, talking about our currency, and do you think that we might still see the Naira appropriately priced now, not the dollar now? The Naira, can we still, some say we might even close the year at 1,300. Some say it could be something around that. I wanted your views really on that and how practical that is as we move on. That's on one side. Then on the other side is the micro, which you talked about. What are those things that needs to be in place to start to trickle to the micro, so that they really understand that they've, tightened their belt for some time and now they can begin to loosen it?
That's right. Okay, excellent questions. Now, the first one is on the exchange value of the Naira. Now, typically, when we make a forecast or form an expectation about exchange rates, we look at 12 different factors. And we consider how those factors are moving and then the implication for the exchange value of the currency. Now, the fundamental one among them is what relates to every price in the market. And that is the nexus between demand and supply for foreign exchange. If you look at that also, it has changed somewhat. And I'll give a quick, pointer to that. Now, if you look at the composition of our merchandise imports in the previous years, let me say up on the 2023, because the pattern started changing late 2024 and now into 2025, you discover that the importation of refined petroleum products accounted for, on the average, about 39.1% of our merchandise imports. Now, see, Dangote Refinery began producing white products, as we call them, locally here. And therefore, we don't need to procure dollars to import refined petroleum products. So the demand for dollars for that purpose has subsided. And look at that component of our merchandise imports, 39.1%. So there is clearly no doubt that that is a factor in what we see today in the exchange value of the naira. That's one. Now, you made reference to the external reserves at about $43 billion today, and the liquid portion almost $43 billion as well. Now, what we usually do is take the liquid portion and divide by our monthly import bill, which means take our trade data. What was our import bill monthly? So if you get the data, it is issued quarterly by National Bureau of Statistics, okay? So if you aggregate the data for 2024, and then you divide that by 12, it gives you the monthly import bill for 2024. Use that now to divide the liquid portion of external reserves. It will give you a number of months. Now, the months of cover, the last time I checked that, which was just over the weekend anyway, I saw a figure of over 12 months cover, all right? Minimum required to assure that the exchange value of your currency will be stable is 3 months.
Yes.
Which means we have more than about 4 times the minimum required to experience a stable exchange value of your currency. Then look also at the state of the banking industry, look at the economy generally, is it growing? Then, of course, one important thing this government has done well, and I often said this to previous administrations in Nigeria, at least the last 30 years, all right? And that is what we call the significant utterances of key government functionaries. So which means the things government functionaries say must inspire confidence in investors and not otherwise. They have managed them very well, okay? So I give a credit to this current administration. Then there's also this issue, I must mention that also, expected inflation, all right? Even the exchange rate, interest rate differentials between the naira and the dollar, for example. So when we take all of this, all of them point in the same direction, which is to inspire confidence in the economy. Now, given all of this and a couple of other factors, what we see as the trajectory for the naira is that it will likely get stronger beyond where we see today in the market, which is to now give an explanation to what you mentioned earlier. Now, some analysts see the naira gaining more value and probably going to 1,300 naira to a dollar by the end of the year. There's that possibility, okay? But I am not that optimistic. I'm not that aggressive in my expectation. But I expect it to be within 1,400 and maybe 1,470. I don't expect it to go beyond that. And that is still good news anyway for the naira in terms of exchange value. And of course, I didn't mention the fact that non-oil exports, if you look at the data, the entire figure we did for 2024, we had done more than that by half year in 2025. That's also an issue that is helping the naira to remain stable and give a prospect of that stability to the end of the year. Now, the second issue is the fact of looking at how we achieve trickle down. And I also like to remind the viewers about this. Now, when we say trickle down, that means how the outcomes of the reform so far impacted the pockets and the stomach, as many analysts will say. And I will take it from this perspective. If you look at the reform done in terms of policy shifts, at the last count in our firm, we counted about 15 or 16 of them since this administration came into office, all right? Now, I always point to 2 of them that people generally ignore. If I have a child in the university, and that child is a beneficiary of NEL fund, that's the student loans, all right? It means that I won't be the one to pay the school fees of that my child. Federal government has taken that. Yes, it's an interest-free loan, but it's also structured that my child will not need to start repaying or he or she finds a job, a salary job. And so if even at that, there's a particular percentage of his or her salary that loan scheme will allow to be paid back, all right? Then monthly also, my child will receive 20,000 naira as stipend, okay, for school sustenance. So which means to the extent of the benefit of my child from that scheme, I don't need to bring that money out of my pocket. That is trickle down, all right? Equally, consumer credit, which of course for me is an exciting one because it is not like the one that was launched in 2007 by President Obasanjo. But this one now says if you will benefit from consumer credit at about 2/3 of the lending rate in the commercial market, all right, you also will use that money to buy what is made in Nigeria. And that's the connection for me, which is good. In the sense that if I want to buy a vehicle, I want to buy furniture for my house, I want to buy a refrigerator, deep freezer, television, computer, telephones, and all of those are covered by that scheme, all right? But if I want to buy them, I must buy the ones either made or assembled in Nigeria, which means the money is not just given out to me to buy anything I like, but I must buy things that will create jobs locally. So for me, that is the winner there. That also creates trickle down. Because those companies that produce those such things in Nigeria are also getting more patronage, and therefore they will employ more hands. So for me, that is another aspect of trickle down. Okay, so if they now continue, and that will now be the remaining work to be done, and we've seen this also manifest in our inflation. I've said it repeatedly, especially in the last 8 years, and that was from January 2017, that if Nigeria will break the back of inflation, we must pay close attention to food inflation. And that means 4 elements of food security. The first of them is availability of food, which means we must go for production massive. We have large expanse of arable land, okay? What we now need to do is to transit from rain-fed farming to year-round farming. And that brings irrigation into the picture, which means we need to invest in irrigation infrastructure. Then, of course, there will be also processing, all right, and storage, which again, provide incentives there, and then we can expand the available food, which is number 1 in food security. The second one now will be affordability. That is when demand on the street begins to feel it. For affordability to happen, you must produce a lot more. So we get the first 2 elements of food security is what the government should focus on. That means make food available in large quantities, especially what we consume locally, our staples. And then secondly, they are available in large quantities. Then of course, there will be a dampening of the price affordability. If we're able to achieve that, as we saw happen recently, food inflation dropped, inflation rate in Nigeria now began to drop rapidly. And for the first time, I will mention this also before I stop, we saw month-on-month inflation rates read negative.
Yeah.
I've not seen that in the last 5 years.
Yeah.
And so that means eventually, if we continue on this trajectory and don't reverse it, they may likely get the economy down from macro stability to trickle down to the micro economy.
Interesting conversation as always. There's never enough time for us to talk about Nigeria's economy, but Dr. Adedikpe, I must say it's always interesting having you, particularly to start this week with us. Managing Consultant B. Adedikpe, an Associate Limited, and also Professor of Practice teaching Economic Policy Analysis at James Hope University. We need to have one more chat before the end of the year, God willing. Thank you so much.
That's great. My pleasure. Thanks for having me.
All right then. Well, interesting stuff there. Well, it's important that we look at the impact of these policies on the micro. That is important, the people on the street.